Hello to all traders and welcome back to another market review brought to you by Orbex. So we're seeing that off the back of the American holiday yesterday, Washington's Day or President's Day, whichever one you recognize. We're seeing a slight dip in the markets from the Dow, the S&P and the Nasdaq, just shying off their record highs. So is this just a slight dip at the moment, or is a full correction on its way? A lot of economists are looking that we will see a bit of a sell-off from the indices eventually. Obviously earnings season has come to an end. We are seeing still stocks flying though at the moment. So in that case, are we going to possibly see another push to the upside for the Dow and the S&P in particular? And what will this mean for a lot of the dollar movements as well? Because the dollar has taken a bit of a back seat against most of its foreign exchange counterparties as well. So let's just get straight into the charts on the Dow. As you can see, we're looking at a slight bearish tone at the moment, just on the daily chart, just zooming in for a better outlook. And as I said, we had this bearish candle really pushing lower at the back end of last week, but since then we had a slight pickup but heavy resistance roughly around the high end of the 38,700 area. So we're just seeing a slight dip, especially along the 20-day moving average as well. If we go onto the 4-hour chart, we're just waiting to see if there's going to be another pickup on the index. So we'll just zoom out slightly. On the RSI, it's really following suit. Not really many divergences on the RSI. So we're just seeing now, as I said, a slight downturn before possibly another move to the upside, but that will possibly have heavy resistance at this particular area here. So we're just basically stuck in this slight consolidation at the moment, just waiting to see if price action will just keep going in a choppy manner and where it will go next. Obviously, if we start breaking below these particular support areas, roughly around the lower end of 38,000, then we could expect quite a different attitude in price patterns. We could actually see open up these particular lows here that we saw at the back end of January. So it is looking likely we could see some heavy resistance, but obviously with the Fed being a bit quiet at the moment, not really giving too many signals, this is really giving the chance for momentum buyers to get into play as well. So let's just take a quick look on the S&P as well. We'll keep it on the 4-hour chart because on the daily chart it just looks like a big trajectory and it's not really giving us too much information. Even on the 4-hour chart, as you can see here, swing high after every swing high, not too much correction, just keeps on going higher and higher. The last time we saw this slight gap in the market was when we had confirmation that most probably with the CPI data coming in that there wasn't going to be any more monetary funding for America. It is getting back on track. Job numbers are better, CPI data is better, inflation is falling back down to 3%. Probably not going to get to 2% anytime soon. However, rate cuts are likely in the second half of this year, so we did see a bit of a fall there. But since then, as you can see, we had a pickup and another slight test at these record highs on the S&P, but since then a bit of a bullish day so far. So let me know what you think. We'll post this video on our YouTube and Telegram channel as usual, and we'll be able to see where the next move is for these indexes. Are we going to have more record highs, or is it just a case of basically, having slight corrections and then a move higher, slight correction and move higher? We'll have to wait and see, obviously. But if we do get more record highs, what does this mean for the Fed in its next meeting in March, and where will we go from here? So thank you for joining me today. We'll speak again next time around. Bye for now.